Do you actually know how much money you're losing by keeping it in your bank account? Most people think they're playing it safe, stashing their cash in a savings account, trusting their 401k through their employer, or relying on their bank's financial advisors to guide them. But what if I told you this trust is exactly what's holding you back financially, and the banks are counting on it? Every year, banks rake in billions by keeping their customers uninformed. They profit when you make poor financial decisions, and they've built a system that's designed to look safe while quietly draining your future wealth. In this video, I'm going to expose the dark side of financial statistics, the part the banks hope you never see. And more importantly, by the end of this video, you'll know how to flip the script and take control of your money for real. Let's get straight to it. The financial system isn't built to make you rich. It's built to make them rich. And this isn't some conspiracy theory. It's basic math. When you deposit money in your savings account, the bank loans that money out at much higher interest rates and pockets the difference. That's how they make money, using your money. Meanwhile, your safe savings account gives you 0.01% APY, and they call it a feature. Most people don't question it because we've been taught since we were kids that the bank is a safe place to keep money. But that idea of safety is a carefully crafted illusion. And here's the kicker. The real danger isn't in the risk you're avoiding. It's in the opportunity you're missing. Let's talk numbers. In 2023, the average U.S. savings account yielded around 0.4% APY. Inflation? Over 3.4%. That means if you parked $10,000 in savings all year, you lost purchasing power. Your money technically grew, but it bought you less. That's what we call negative real returns. Now compare that to a simple money market fund, or a high-yield CD or treasury bonds, many of which yielded 4 to 5% last year. That's over 10 times more than the average savings account. And it's still low risk. So why don't most people invest in better options? Because they don't know how. According to a 2023 Gallup poll, only 61% of Americans own any stocks at all. That means nearly 4 in 10 Americans have zero exposure to the markets, zero exposure to the single most powerful wealth-building tool in history. Meanwhile, the top 1%? They own the markets, and they understand how the system works. And banks? They're not going to help you break free. They make money when you stay passive. They don't lie, they just don't tell you the whole story. They offer products with fees, restrictions, and fine print. They wrap it in fancy words like secure, guaranteed, or long-term growth. But the truth is, many of these products, like basic savings accounts, overpriced mutual funds, or underperforming retirement plans, are designed to benefit the bank far more than you. Meanwhile, the wealthy do things differently. They don't rely on bank savings accounts. They don't trust traditional financial advisors from big institutions. They allocate their capital across diversified portfolios. Treasury inflation-protected securities, REITs, ETFs, index funds, dividend stocks, real estate, and tax-advantaged accounts. And they don't fall for emotional marketing. They follow numbers. They optimize for return, not comfort. Here's the good news. This mindset isn't reserved for the rich. In fact, it's how many of them got rich in the first place. It starts with education, with asking better questions, with saying, wait, why am I earning 0.01% when there are better options available? Because the truth is, it doesn't matter if you're starting with $100 or $100,000. What matters is what you do with it. So what can you do right now? Step 1. Stop blindly accepting whatever your bank offers. If they're promoting it to everyone, it's probably not designed for your best interest. Step 2. Start learning. There are thousands of free resources out there. Books, podcasts, YouTube channels, even Reddit threads, filled with people sharing exactly how they grew their money without falling into the traditional traps. Step 3. Start small, but start smart. Whether it's opening a Roth IRA using a brokerage like Vanguard or Fidelity, or putting a little into a money market ETF, the key is getting off the bench. And let's be real, just because your bank's app shows graphs, balances, and progress bars doesn't mean you're in control. That's just interface psychology. Real control is knowing where your money is, why it's there, and what it's doing for you. If you don't understand the answer to those three questions, you don't have control. You just have access. And the media plays a role in this too. Think about every bank commercial you've ever seen. They talk about trust, community, family. We're here for you. But they never talk about inflation. They never mention real returns. Because they're not trying to make you think. They're trying to make you feel. The less you think, the more you trust. And the more you trust, the more you lose. This is about more than just numbers, it's about freedom. Every bad financial decision you make today, or every good decision you don't make, pushes you further away from freedom. Freedom to quit your job. Freedom to move. Freedom to help your family. Freedom to live on your own terms. The system benefits when you stay trapped in a paycheck-to-paycheck cycle. Breaking that cycle starts with financial awareness. And when you shift your financial mindset, you change more than just your bank account. You change your environment. Your kids start asking better questions. Your partner starts investing with you. Your family stops treating money like a mystery. You start a chain reaction of change. But if you don't shift, the cycle continues, and ignorance becomes generational. And you ever wonder why schools don't teach this? Why we spend 12 years learning math, science, and history, but not how compound interest works? It's not a coincidence. A financially literate population doesn't blindly feed the system. It questions, it chooses, it grows, but that would cost the institutions billions. So instead, you're taught to trust, not to think. And here's another fact. The US consistently ranks among the highest countries in real interest rates. That means investors here, people like you, have access to some of the best risk-adjusted returns in the world, but only if you know how to use them. The same system that drains the uninformed can reward the informed. The game isn't rigged, it's just not fair. And that's your advantage if you're paying attention. Let's put it in perspective. Imagine two people each start with $10,000. One keeps it in a savings account at 0.4% APY. The other invests in a conservative portfolio yielding 5% annually. After 20 years, the first person is barely $11,000, the second, over $26,000. That's more than double. Same starting point, same time frame, different knowledge. Now imagine they added $200 a month to those accounts. The gap balloons to 6 figures. And the saddest part? The person earning less thinks they're being smart and safe. That's the illusion. And it's costing people real money and real freedom. And let's be clear, I'm not talking about risky day trading or crypto gambling. I'm talking about basic, low-risk, well-understood investments. Treasury bonds, money market funds, index funds, investments that have stood the test of time. The real risk isn't trying. The real risk is not trying and staying stuck in a financial system that doesn't have your back. So if you're thinking, no one ever taught me this, you're right. They didn't. And that's by design. But now that you know, it's your responsibility to take action. Because once you're aware, staying passive is a choice, and it's a costly one. If you've made it this far, congratulations. You're ahead of 90% of people already. The truth is simple. Banks don't make mistakes. They profit when you do. Every time you accept a low-yield account, an overpriced fund, or a hidden fee product, they win. And they're doing it with your money. So, if this video opened your eyes, share it with someone who still thinks a savings account is a smart investment. Post it in your group chat, your family thread, your Facebook timeline. Let's start a financial awakening. And if you want to see exactly how to build a smart investment portfolio, even if you're starting from scratch, hit subscribe, turn on notifications, and stick with this channel. Now I want to hear from you. Where is your money right now? Comment below, and let's talk about it. Because real financial change starts with real financial conversations. See you there.